So I'm in this live trade on the xBrat range breakout automated strategy builder on the live account that I'm trading publicly. One thing I wanted to go over for our users is explain the confirmation trade management strategy. So this is on my VPS, so bear with me a second. So this was the signal candle here where the crosshairs were. It came back through that London opening range, and that was our signal candle. And the next candle where the little blue triangle is here, that was our entry. At that point, when we get the signal candle, the green EMA was above the blue. So what happens on the strategy, it switches from target to confirmation because we're looking for runners, because we're entering the trade when the green is above the blue. So as long as this green remains above the blue, that's the confirmation trade management strategy, and that is, if it crosses, it takes us out. We do have stop loss adjusts in there, so it's gone through 40 ticks already, so it's locked in with a trailing stop here of 10 ticks. The next one I've just marked up on the chart here is the 60 ticks, so that's our last and final stop loss adjust. So that's a more aggressive one. So if it goes through 60, it will adjust then to lock in 30 ticks profit. So this is one contract. I've got a VPS there with one of the clients on. He's got 4 contracts, so he's around $2,300 profit right now. I'm $550 on one contract on this particular small account. So remember, the confirmation strategy, first of all, you've got confirmation when you get the signal candle, the green is above the blue. So we're looking for a runner. So the only way to get taken out of this is hit the flat button, or the green crosses the blue, or it crosses the stop loss adjust. We've got 2 stop loss adjusts. If I just go on the strategy here, so this is what we call a continuation trade because it's continued back through that opening range. So if I scroll down now to the continuation strategy here, okay, so we can see here we've got some stop loss adjusts. So we can see first of all exit mode confirmation. So there are our targets if we didn't have the confirmation, but we have. So then once it goes through 15 ticks, we go to 2 ticks offset, so that's risk-free. When it goes through 40, we take it to 10, and again this is done with that the optimization. When we look at the data of the last 90 days and we look at those average moves, and we always expect a pullback at some stage, and then when we go through 60 ticks, it moves the stop to 30 ticks. So right now we've gone through that second phase where we've gone to 10 ticks. So what we're doing now is trying to weather the storm of this pullback. So we've got 10 ticks locked in, and we've got plenty of room for this pullback to happen. Remember, if this is a 10-minute candle, so when this, we're 9:43 now AM EST, so we've had that open, we've got data at the top of the hour, but regardless, we've got that stop in there, 10 ticks locking that profit in right now. Or if when this candle closes, the green crosses the blue, we'll get taken out of the trade at that point. But right now, this is quite a serious pullback. We're almost engulfing, but we're only 3 minutes into this 10-minute candle, so not a lot going on. So what I'm going to do is just pause the video and just hang around and wait to see what happens. So that 10-minute candle has closed. Reasonable rejection of the lows there, which I'm reasonably pleased about, but it wasn't with more volume than the previous candle. So it wasn't a high volume rejection of the lows. So there's still chance that this will pull back. We've got 10 minutes now, 9:50 it is. So we've got 10 minutes before the data comes out. We've got housing data. Again, that will affect copper because, you know, copper and housing intrinsically linked. So right now, that's, as far as behaviour is concerned, that's pretty good. We can see the big uptick on the green EMA there. So we had that little pullback there. As long as we get a nice solid green candle this time, that will continue to move further away from the blue. Ideally, it would be good for us to get through that 60 tick target to adjust that stop loss more aggressively at 30 ticks, because we don't know, we can't look right, we don't know what's going to happen on that data, we don't know how that reaction is going to happen because we've not got a crystal ball. But the main thing is we have got profit locked in right now, but ideally for me I'd like a good run in on this last 10 minutes before data, get through that that 60 tick, lock in 30 ticks. I'd be more happy with that, but I have to let it run and do its thing. It's been optimized. I've optimized this strategy through housing data over the last 90 days, and those results have said that it's best to adjust the stop at 40 and 60. So I have to let it play out and let it run. So I'm just going to pause the video and wait for the data and see what happens. Okay, so we've got a bit of an inside candle really. 30 seconds or so to the data, so we don't know what's going to happen. Didn't quite reach that 60, so we'll see what the reaction is to data. I mean, maybe flat, maybe neutral, but we've had that. Well, the last two candles really have been lower volume than each other. I'm looking on another screen on my here, so I've got the manager on here, so we can see it's just basically lower than average volume, and the cyan candles on there mean it's each candle's lower. So we really just got to wait to see what this reaction is, whether it's a long-term reaction or a little pullback and away we go again. So there's no massive reaction to oil. Oil's going up a little bit, and obviously you can see copper's coming down. I mean, it doesn't matter what the data is. It's not your job to go and have an opinion on how. You just need to understand the reactions. And again, we can go back and look at that data at the weekend and see how this reaction continues for that data. Was it hit? Was it a miss? Above or below? Was it neutral? How did it affect copper? It's pointless looking at that right now. All we need to do is understand that behaviour, what's happened. I'm just keeping an eye on that volume right now. This move down. It's still a cyan candle on the 10-minute. It is red on the 5-minute, so there's increased volume from the previous candle, but it's still lower than average volume. So I'll keep an eye on that as well. These critical points, even though this is an automated strategy, I do like to observe, and that's part of my job as a trader. We got a big spike in volume up there. You see it go pink at the top there. There was a massive spike order book that did take the price up for a little bit there. So it's 10:02, 2 minutes after. No massive reaction from oil. We've had some sell orders come in on this particular candle, but they're rejecting the lows so far. So on the 5-minute candle, that is rejecting those lows on higher volume than the previous candles so far. Again, we don't know that behaviour until it closes. This is the 5-minute candle here. As we can see, it's rejected those lows so far. The candle is green or red, which is more volume than that cyan candle using the manager. So I am understanding that behaviour right now. There's more volume coming in on this particular candle on the 5-minute, and there should be by the time the 10-minute candle closes. A good rejection of these lows on higher volume. If it was higher than average volume, I'd be very, very pleased, and that would be a good sign that it's going to turn up. But right now, we've just got this rejection going off. One of the users on Teams of the range breakout automated strategy, loving it. Okay, this is a good sign. So now we're still not above average volume, but this is a decent rejection. So with a 5-minute candle close now, that is a really good rejection of those lows. It's still lower than average volume, but the green means there's more volume than that previous candle. So this is a good sign. Can't grab hold of that chart to move it. I'll just minimize it. So he's trading 2 contracts, so he's 1.2k in profit. 4 contracts is 2,400 right now, and this is the 1 contract small that I'm sharing with the public. Trying to find that 5-minute chart again. There she goes. Let's just pull it over there, out of the way, and keep an eye on that behaviour. So on the 10-minute chart with the manager on the screen, it's still a grey candle, even though it's green on this particular one, but it's grey. So there's no increase in volume compared to that previous 10-minute candle at the moment. Quite a bit of time left on this candle though. About 1 minute left on this 10-minute candle. It's trying to breach those previous highs. Just here, remember that's our, I've just drawn that in, but that's our demarcation for the next and final stop loss adjust. Again, this 10-minute candle is grey so far on the manager on the other chart. So there's no increased volume from the previous 10-minute. I've got that long before it changes. The rejection of the low is a good sign. I would like it with more volume though. Okay, we've had the candle change. That's a pretty good candle there. See if we can get it through this 60, then I'll stop the video, because otherwise it could go on all night. Because if the only other thing that could happen if we go through the 60 is the next Guardian zone is up here. This is a big 15-minute zone. So we have it on the strategy here. If I just click onto the strategies. So what I have is I programmed it in to take profit of the next Guardian zone. If I go down to continuation trade, you see here exit on Guardian zone touch is checked. Okay, so regardless of our confirmation management strategy in the past 90 days when this has been optimized, it's been the most advisable thing to do is if it hits the next target zone, and this 15-minute zone is the next support and resistance zone, then it will take the profit. So this moment in time, it doesn't want to really push up, but I hope hopefully you understand what I came on this video for. Really was to look at that confirmation type strategy for our users, but also I think it's good information for other people to see how this particular automated strategy works. So it's only had 2 or 3 trades during September, and we're on the 25th September now, but it's not about quantity, it's about quality. With this type of strategy, 3 trades a month is fine. For the 4 contract account, we're around about $2,000 profit now. We're around 500 on the 1 contract, and this is how those types of strategies are scaled with more contracts. Obviously you need more margin. Again, this is the small account that I'm sharing with the public that I started around about the middle of June. So just over 3 months ago, that started at $12,000. Current net liquidity, obviously with the current trade open, is around 17,443. So we're getting close to that 50%, tantalizingly close. But we'll see how this goes. So I'm going to stop this video now. Check out the links below for all of our automated strategies for the NinjaTrader platform.